Welcome, Beyond the Fringe Show. I'm your host, Tatiana Zalan, and I go live every Friday, 2 p.m. Dubai time. Except for the last month, I was traveling overseas and it was really difficult for me to maintain the show schedule. And so instead of stressing out, I decided I'll have a good rest and also spend quality time with my parents. But I'm back online and we will continue every Friday from now on. Why should you be listening to The Fringe? The Fringe helps you to navigate the rapidly changing world and increase the odds of your success. Here we discuss technology, startups, and mental models of successful people so that you too can take advantage of the opportunities in the new digital world. In the last couple of shows, I talked about various aspects of cryptocurrencies and blockchains. In particular, we discussed the topic of reimagining finance through various innovations like stable coins, automatic market makers, and flash loans. We also discussed how you get started in DeFi, how you as an investor can earn passive income through things like staking and lending or becoming a liquidity provider. Today, we continue this topic, we continue this theme of how can you get engaged in this very exciting space in blockchain and cryptocurrencies. And in particular, we will be discussing how to invest in crypto for maximum returns. Before we go any further, just a word of caution, a disclaimer. I'm not a financial advisor. I don't have a financial degree. And everything that we discuss on this show is for information and educational purposes only. The question that I get very, very often is how do you get started in crypto? And that is a very broad question. It depends on your familiarity with crypto, on your risk profile and investment horizon, whether it's short-term or long-term. So there may be many, many answers and many takes and angles on the same issue. One approach that I've recommended before, if you're very new to crypto and you're risk averse, you don't have a lot of time, maybe you don't have a lot of time to research, then just invest in top cryptocurrencies like Bitcoin and Ethereum, which is the two leading cryptocurrencies. And also maybe you can also invest in DeFi or decentralized finance in some kind of an index if you are new, rather than in individual projects. For example, CoinDesk, which is a very central and big centralized exchange, offers the so-called CoinDesk DeFi Index, and it's a weighted index of about top 10 projects in DeFi. That includes projects like Aave and Uniswap and Compound and Synthetics. However, if you want to be a little bit more adventurous and your risk profile is a little bit kind of higher, then the most lucrative way of engaging in crypto and for maximum returns will be to identify early stage projects very early on, and these types of projects can give you returns, can go up 50, 100, and sometimes 1,000 times. But the caveat to that is you really need to be very, very early. And for that to happen, you need to start thinking as an angel investor. And what does it mean, being an angel investor and having this thinking like an angel investor? Angel investors, for those of you who may not be familiar very well with the term, are early stage investors. They invest their own money and they take the most risk because they invest in companies that sometimes don't even have a product. They only have an idea and a good team. So they take the most risk, but they can also reap the highest returns. And just to give you an idea what kind of risk they're taking in the traditional world, not in the crypto world, but in the traditional world, if we are talking about angel investors and in the US context as well. Well, out of 10, if you invest in 10 projects, you'll probably have 5 deals that will be complete investment write-offs. They're no good. 3 deals will probably return less than the amount invested. 1 deal will return perhaps the amount invested, the target return expected. And there will be 1 deal which will be a total home run, and that home run will pay for all the disappointments and all the failures. So 1 project out of 10 projects, that's kind of a normal statistic for the average angel investor. Obviously, because it's only 1 in 10 that succeeds and succeeds big way, you need to identify a broad range of projects. And my advice is, when you're starting out, to have a really broad-based idea of what you're going to invest in. Maybe you will be looking initially at 10 or even 20 projects, and then you filter them down to 1 or 2, and you repeat this process again and again. So out of these 10 or 20 projects that you identified, you will probably need to filter out and ultimately invest in 1 or 2. One of the first questions that you may be asking yourself, well, where do I look for projects? And there are multiple sources, and I probably won't be even covering them all, but there are some of them which I'm familiar with and I've used, so speaking from my personal experience. If you look at many founders of successful current cryptocurrency projects, they have become quite wealthy because of what they're doing, and they become angel investors themselves. And often they support those sorts of companies that are part of or will become part of their ecosystem. So have a look at people like Vitalik Buterin, co-founder of Ethereum, or Gavin Wood, another co-founder of Ethereum now, founder of Polkadot, or founder of Aave. Learn in which companies they invest. They're quite open about it. They write articles, and you can find them on Twitter as well. So that's one source. The other source, leading venture capital funds. Funds like Polychain Capital, Multicoin Capital, A16Z, which is Andreessen Horowitz. They're all leading venture capital firms. And some of them are traditional venture capital firms that have crypto funds these days. So they all invest in crypto projects. Have a look at where they are investing. It's usually a very good sign that these projects may go up, and they're kind of valid and solid projects. Bearing in mind that venture capitalists and angel investors do make mistakes themselves, and only 1 in 10 will succeed. But nevertheless, that's a good start as well. You can also look at influencers and thought leaders and investors and traders. They typically have Telegram groups and YouTube channels where they talk about early stage projects. My personal favorites are Coin Bureau Insider and Sheldon Evans, both of them on YouTube. They seem to be solid guys. They don't shill any projects. They have a pretty good analysis of early stage crypto projects. So that's another source. Another source are Telegram channels and Reddit channels. Go and check them out. Follow crypto influencers on Twitter. Identify a few key personalities that are kind of big in the space and follow them. You can subscribe for free for a number of magazines. I personally subscribe to Cointelegraph. They provide very good information and also digest of all the news things in crypto. Finally, you can go even to conferences. If you're really engaged in the space, you want to stay engaged, just go to various industry conferences on blockchain. There are many of them. Maybe there is one near you in your capital city, and just have a look around. What kind of founders are there? What kind of projects they're pitching? But by all means, through when you're going through all these sources, use your own judgment, your common sense, and your intuition. Just don't blindly follow all these experts and influencers on Twitter or on YouTube. Do your own research. It's very, very important. The project needs to fit your idea of what it should be like rather than somebody else's idea. Now that we know what kind of sources to look for, how do I actually select a project and what criteria and factors do I apply? And in other words, how do I do my due diligence? Remember, it's an early stage crypto project. So mostly what you're investing in is the people, the product potential. Sometimes the product doesn't exist yet. Sometimes it does, in most cases it does, but sometimes it doesn't, and market potential. And there isn't simply not any other data. You can't look at the cash flows. You can't look at customer acquisition costs. There is no such thing as virality at this stage. So all these metrics are not available to you. So it's people, product, and market potential. The way I personally go about it, the first thing that I check with the new projects is to see whether this project received any funding from leading angels and VCs. One of the sources to go, I personally like it, it's called Crunchbase. It's free. You can have a look there. And if there is some funding for these projects, that will give you some comfort. And this is because venture capitalists in particular invest other people's money. So they have to be very, very careful where they invest in. It's not a kind of a deal breaker if the project hasn't received any money yet because it's so new. But if it does, it's pretty good indication that somebody else has done due diligence for you. It will give you some comfort. And the other things that you need to be looking for, team, idea and its utility, and what I call tokenomics. And under this not very much precise term, I typically discuss things like market capitalization, if the project is listed, token supply and tokens in circulation, and token distribution and allocation. Most of this information can be found in the white paper on the website, on the company's website. If not, then you need to find out if they've got a Telegram channel or maybe a Reddit channel or Discord channel, and go there and simply see what they're talking about. So let's start with maybe the team first. Remember, as an early stage investor, you bet on founders. All early stage projects are bets on founders. So if you can, and sometimes you do, meet or talk to the founders, give them a call. It's possible. The people in the space are quite open. If not, then look at the founders talking about their projects on YouTube and Twitter and Telegram and Reddit. Just say or think, what are the founders saying? Where is the project going? You need to check, of course, their credentials, their previous experience, particularly with startups. Typically, serial entrepreneurs, if they've got experience with previous startups, there may be crypto startups or just traditional startups. They're very good at execution, so that's one thing to remember. And check their qualifications. It's quite important for technical founders in particular to have some solid background, maybe from a good university, from a good college. Because you're betting on technology, ultimately, you need to have a look at and have a deep understanding of, is there a good technical person on board? And typically these days, what we see in startups are three people who are really critical to a startup. It's the technical founder, the salesperson, or sales and marketing person, and the person who will look after the community. If these three are on board, you probably can feel rather secure that the team is of the right composition. And mind you, these days, teams tend to be quite large because people are in a very dynamic and fast-moving environment. They have to deliver their milestones very, very quickly. Also, all of these teams will have, in most cases, advisors and boards of advisors and just all sorts of maybe boards, even more traditional boards. Have a look at these people. Are these people credible? And don't fall for kind of superstars or celebrities on these boards, because it doesn't mean much. A board member, an advisory board member in particular, just needs to do the job and to know the space. Very often these people are put there for PR reasons rather than them being expected to do any job. So that's one thing, team. The other thing that you need to look at are all the factors related to the project itself. And perhaps one of the interesting criteria that not many people are thinking about, but I think it's important, is the timing right? 3 years ago, NFTs, non-fungible tokens, were just a little bit too early. So if you invested back then, there was no guarantee that the project will succeed. If you're investing now in 2020 or 2021, yes, surely, we understand a lot more about NFTs. Or if you want to, say, invest in a decentralized social network on blockchain, I think this is still some years off. So don't fall for the projects. They're a little bit too early. The next thing to do is to look at what kind of activity is going on various channels. And in particular, there should be a lot of development activity. And the way to check it is on GitHub. Most of these projects are open source. So lots of people contributing as a community to the project. So they make their contributions, their improvement to the protocol on GitHub. You can have a look whether there is a lot of activity. If there is a lot of activity, a lot of people contributing, that's a very, very good sign. Of course, you also need to look at what's the use case. What problem does this project solve? Is there a reasonable use case, or is the project purely speculative? For example, if we talk about the two known cryptocurrencies, the use case for Bitcoin is a store of value. The use case for Ethereum is it's the financial rails of the new decentralized financial system. So is there a use case like that for your favorite project? Who are the competitors there as well? Typically, you would look for a practical use case in a very small niche without much competition. Another very important criteria, apart from development or developer activity rather, does the project have a community? And community are early users, early adopters. For NFTs, for DeFi, community is absolutely paramount. Have a look at whether there is a lot of social engagement and interaction on various channels. Check the following on Twitter, on Telegram, and Discord. If it's 500 people, probably it's not that great. But if the following is in the thousands, and it's still a new project, then probably that means a lot for you. And finally, you can also look at the so-called roadmap, and you can find almost all projects have roadmaps. And you can find these roadmaps either on their website or maybe on the Telegram channel. That's the roadmap for the development of the project, and it will be very important for you if the project is not listed, but it may be listed at some point in time on different exchanges, because prices at that time usually move. They pump and typically dump. That's not always the case, but pumping is very, very typical when a new project is listed on the exchange. And finally, we need to talk a little bit about tokenomics. And by tokenomics, I mean market capitalization, token supply, and tokens in circulation. If the market capitalization, typically you would like to have a project, if it's traded, of course, that doesn't have a huge market capitalization. And the smaller, the better as a general rule. And that's because it will give you potential for growth. If it's already in the billions, then probably this project will not go a lot further. But if it's very low millions, that there is some hope there. Also, you will need to have a look at whether there is high demand for the token, if this token is listed, and whether it's actively traded. If it is actively traded, obviously that's a very good sign. You may also want to know what type of token this is for this project. Is it a governance token or utility token? One of the reasons is that there are some legal and taxation implications across countries that they vary widely, so I'm not talking about that. But the interesting thing about governance tokens is that they give you voting rights. Utility tokens don't give you any rights of that kind. You also need to check on the tokens total supply and tokens in circulation. And ideally, you probably wouldn't want total supply to be in the billions of tokens. Look at Bitcoin, for example, it's only 21 million, and that's because of the algorithm and because the developer, the creator of Bitcoin, wanted to ensure scarcity, and scarcity, as we know from Economics 101, this is what drives price. And in most cases, you would probably want fixed supply. Sometimes projects don't have fixed supply of tokens. Fixed supply is preferable. It's not a deal breaker, but it will give you comfort to know that there will not be any more tokens issued. Some cryptocurrencies, and you probably need to know that too, implement the so-called reduction in their circulating supply, and that's typically done through burning. They burn tokens, and that's to decrease the supply and to increase the value of the token. And finally, you also need to look at the token allocation. Ideally, you wouldn't want to invest in project where a lot of tokens are allocated to the founding team and to the advisors. If it's more than 30%, I would be a little bit worried, because then the project becomes just too centralized, no decentralization whatsoever, and it's very easy to manipulate these kinds of projects where a lot of tokens are given to the founding team and to the advisors. So, what are the key takeaways here? It may seem like a tedious process to you, right? And it is. I'm not going to hide it. It's very tedious. It's long. It will take you some time. Do your own research. But yes, it's really worth it to go through all these stages, identify all these criteria, and just tick them off. Maybe develop a spreadsheet for yourself and with all these criteria, and fill the spreadsheet in and see what you've got. Which of the projects seem to be the most promising? And as always, only invest as much as you're prepared to lose. Don't go overboard. Don't be brave. You're just starting out. Commit a very small amount, maybe $1,000, and maybe even less. You can start with $100 very easily. We've discussed 3 factors that you need to consider when investing in early stage projects. You need to think like an angel investor, and therefore you pay particular attention to the team, to the project's user case, to the tech itself, and tokenomics, in particular market capitalization, supply, and allocation. I also strongly recommend you start joining various crypto channels. They're mostly on Telegram, but they're also on YouTube, they're also in Discord. And there you can discuss your projects with like-minded people. And also check out Reddit. On Reddit, you can find almost any channel dedicated to a project of your interest. So this is for me for today. Again, I'm not your financial advisor. Do your own research, have fun. It's a very fun process, although it may seem tedious as well. You will learn a lot as you go through that. Thank you for joining. I shall see you on the Fringe Show next Friday at 2 p.m. Dubai time. And from now on, there will be no breaks, no holidays. Thank you so much again for joining.